Trading on the 1 minute and 2 minute chart is complete garbage. Every day, new traders flock to these micro time frames thinking they'll make more and more money by taking more and more trades, but they're just setting themselves up to fail. You've probably seen those flashy ICT videos promising sniper entries, 90% win rate, only to catch 10 points on ES. Let me be honest, this is complete BS, especially if you're new to options trading. I like all-day trenders, big gains, tiny risk, where portfolio doubles, and stock just keeps going up and up and up and up. On these ultra-low time frames, your emotions will be a total mess. You'll be glued to your screen, watching every tick, panic selling, FOMO buying, and ultimately blowing your account. You're no different than a grandma sitting in front of a slot machine. Here's the thing no one talks about. Time frames talk to each other. And no, I'm not talking about an all-girls gossip club. The time frame tells the story, the history, the path to financial freedom. The 1 minute chart will sometimes look bearish and the 30-minute chart is bullish. But which one is right? Which one provides the actual signal? Which one will make you the most money? Today, I'm going to show you the best time frame so you can finally start making money. This is what is the best time frame for day trading. What is the best time frame for day trading? The answer is, well, it depends. But here's the problem with new traders. New traders get annoyed as soon as I say something like that. They're like, well, just tell me which one to use. If I stick to the exact time frame that Ellie uses, I'll start making money like Ellie. There's so many options. One has to be the best. That is incorrect thinking. You should not think that way. And I'm going to explain why. So here's a solution. I'm going to tell you the exact ones you should use, how to use them, and why it's the best time frame. If you don't understand the why, you won't understand the how to do it, and therefore none of this is relevant to you. So please pay attention as I go through this. So here's a list of time frames that I have used in the past and ones that you're probably most familiar with. The 1 minute, 2 minute, 3 minute, 10 minute, 30 minute, and 4 hour. Here's the thing. There's something called a smaller time frame trap, and I classify every smaller time frame of something that is under the 3 minute chart. So the 1 minute, 2 minute, and 3 minute, these are all a trap. Why are they a trap? When you're trading the 1 minute, 2 minute, and 3 minute, in this case, I'm going to say the micro time frames, you're going to experience one of the following. You're going to have increased emotions, right? You're not going to be able to sit easy into a trade. You're going to be a little bit uncomfortable. There's a lot going on. You're going to feel increased stress. There is a ton of fake outs on the 1 minute and the 2 minute charts. I see it all the time. New traders will post a 1 minute chart only to get their stop absolutely blasted and taken out, and they lose a bunch of money and they never trade again. There's tons of fake outs. I see it all the time. There's a massive over trading risk. If you find yourself over trading and you're taking a ton of trades every day, you need to use a higher time frame, okay? The 1 minute chart does not print as many entries and exits as you think it does. Lastly, if you work a full-time job, there is no way you can watch a 1 minute chart. It's just not possible. You're sitting at your desk trading on your phone. You can't sit there and watch a 1 minute chart. It's literally impossible. You're setting yourself up for failure. So I'm going to illustrate this with an example. So here's a chart over here. Is it a long or is it a short? What do you think? I'll give you a few seconds to think about it. You can pause the video. So here's an example of a 1 minute chart. How are your emotions here? Okay, there's a lot going on here. There's a lot to take in. There's a lot of possible setups you probably see in your head. Okay, so let's go over them. So maybe you thought this was a bear flag here. Okay, so you thought this was a bear flag, you shorted it, and congratulations, you made money for about a candle or two. Now it reversed on you. So now you think, oh, well, here's a bull flag. I'm going to take this long. And guess what happens? It knifes down and you get stopped, aka you got faked out. All the time, traders will come in here. Remember, this only contains like 20 minutes worth of price action, not even. So you've gone long, short, you're getting stopped out left and right. Okay, you are over trading. So let me go back to the question. Is this a long or a short? It's actually a long. Okay, so how are your emotions here? So not only you thought this was a bear flag, and then you thought this was a bull flag up here. Okay, so here's your bull flag. So you took this long, and then you got stopped out. Now you're on mega tilt because the stock decided to run all day without you. Now you're just frustrated, and your headspace is not in the right place. This is the trap of a smaller time frame. But here's the thing. If you just looked at the time frame we're going to go over, you would see this is just a breakout. The higher time frame trap. So here is the higher time frame. So I classify a higher time frame as like a 4 hour or a daily. Okay, remember, we're day traders. Okay, so we're trading intraday action. This is why the 4 hour is a trap. So we can see the 4 hour candles take forever to form. Okay, it literally takes 4 hours. There rarely is 8+ entries on the 4 hour. Okay, there's rarely 8+ entries. You're not going to find that nice clean retest. You're not going to find that nice clean EMA tap. It just doesn't happen. And why, right? It doesn't react fast enough. We're day traders. It's a fast moving business. You need to get in, you need to get out. Okay, trades last sometimes an hour, 2, 3 hours. Okay, that's how long a trade lasts. The candle hasn't even closed yet on the 4 hour time frame. You can't really get a pulse on the market. And what do I mean by pulse? Is you really can't get a sense of the intraday movement. Okay, why? Because you won't get a sense for the intraday movement until lunchtime, when the market pretty much slows down and you're going to miss the entire morning move. Lastly, if you were trading 0-day options, okay, you're going to experience catastrophic losses on 0 days, okay? Holding 0 days for 4 hours based off one candle is literally setting you up for a 99.9% loss, or just complete wipe and evaporation of your money. Here is a 4-hour chart. Is this a long or short? Where is the entry? To be honest with you, I just see 2 candles. I have no idea what the entry is. What's the pulse on the market? Is it bullish? Is it a little bit choppy today? You have absolutely no idea. Can we see what's happening on these candles intraday? Has there news? Did anything pop like that? Nope. And how are your 0-day contracts? Okay, the stock did not move for 4 hours. You're bagged. And it's actually a short. Where was the entry? The pulse, the reaction, your 0 days. You have no idea. Why? Okay, let me explain. So how are your 0 days? Well, okay, so here's your 4-hour candle, and then the market opened the next day and went down. Okay, 0 days expired right here. So you lost money there. So where's the reaction? You really can't tell anything from this chart. Okay, what's the pulse on the market, right? Can we get a feel for it? Can we get that trader's spidey senses? The answer is no. And where was the entry? There's not enough information here, okay? So that is why the 4-hour is a trap. Ellie, I think you missed 2 time frames on your list. You're right. I did that on purpose. But before we get into that, make sure you like and subscribe and leave a comment if you're loving these videos down below. I want to introduce a concept to you called the time frame tango. You can see we have this lovely couple here, and they are dancing in front of the 5-minute chart, the 10-minute chart, the 15-minute chart. There's some 3-minute charts back here. If you look a little closely, this is a 30-minute chart, and they are dancing, okay? The time frame tango. Remember this. What is the time frame tango? So if we remember back to the short-term traps and the long-term traps, we really need a happy medium. We need something that gives us a pulse on the market where we can see the reactions, right? Something that's right in between, right? It's just right. Additionally, this time frame needs to react fast and slow, okay? So it's going to make us patient, but also give us actionable signals and give us a read on the market. Additionally, it's going to provide clear entry signals, okay? We're not going to be guessing. Lastly, it also will tell us how high and how low a stock could potentially go. This is the time frame tango, or TFT. So what time frame or time frames will give you all of that? The 10-minute and a 30-minute chart. Okay, the 10-minute and 30-minute chart are what you need to master as a new trader. I'm telling you, I've taught many traders in the past, and as soon as they switch to the 10-minute and 30-minute chart, their gains go insane. I'm telling you, I've been trading the 10-minute and 30-minute chart for almost 6 years, and it is literally everything you need combined into one, and we're going to dive into this much, much deeper. So how does it work? Okay, this is very key. How does it work? How does a tango work? Remember, it takes 2 to tango, okay? It takes 2 to tango, okay? The 10-minute and 30-minute chart. So the 10-minute will provide us the entry signals and the trend, while the 30-minute will tell us the range and how long to hold the trade for. Remember, it takes 2 to tango. Here is the magic of the 10-minute chart. Okay, so 10-minute will provide us with entry signals. Everyone loves entry signals, okay? We'll be identify the trend, and we'll also be able to see more data in the candle. 1-minute chart provides very micro amounts of data. Think about it. If you worked like a data factory, right? You want all the data in there, all the data, but you need to find a happy medium in order to confirm our thesis, right? Or confirm our bias. And the 10-minute forces us to be not patient, but patient. Remember, a 10-minute chart takes 10 minutes to form. Okay, that's a lot of time for you to get information on the market as you sit in a trade. The 1-minute chart moves too fast and will print too many false entries. If you're under PDT, you will run out of buying power without a doubt every single day. So here's an example of a 10-minute chart. We can see the stock breaks above the pre-market high and comes down and perfectly retests this. Look how clean these candles are. Look how picture perfect. Look how clean this pre-market high retest is. It's super, super clean. It's soothing to the eyes. Now here's the 1-minute chart. So you want to trade the 1-minute chart because you think you're an elite scalper. Okay, so here's the pre-market high. You don't get a retest for it, but you think that there's a little bull flag here. So what do? You enter long just to get stopped out. Okay, then you re-enter on the reclaim to get stopped out. And then all this action under here, you now think is a bear flag. And what happens? The stock just rips higher. So let's compare the two next to each other. 10-minute chart, clean entry retest. You thought this was a bull flag right here, only to get stopped out. Now it's under the pre-market high, so now you take it off your screen, only to miss all of these gains. When at the 10-minute chart here on the left, you can see retest and literally made you money for 1, 2, 3, 4, 5, 6, 7, 8. 80 minutes you made money for it. Every time you looked at your brokerage for 80 minutes or almost an hour and a half, you made money. Meanwhile, with the 1 minute, you had your foot in your mouth and you're just kicking yourself in the head because you missed all of these gains. How do we identify our entry signal? Remember the LE model. So first, the LE model, the L in LE model is a retest level. So in this example, we can see on a bullish case, previous day high retest right here, comes up, forms a nice little flag, and then rips higher. On the contrary, on a bearish retest, you can see previous day low, it comes up to test it, forms a nice little bear flag right here, perfect retest, and then flushes to the lows. LE model, levels first, and then EMAs. Reminder, if you think back to my previous video where we discussed range breaks, okay, this is what a previous day high retest looks like. Remember, so it's breaking out of the previous day's range, so therefore it is a bullish trend. This is as bullish as it gets. On a previous day low, it's breaking below the low of the previous day candle. Therefore, the trend is bearish. Now, I think I forgot to mention that my pre-market high levels are always dotted. Always dotted. And why are they dotted? So this helps me mentally, where I know that pre-market highs are from the after hours action, okay? So it's relatively low volume. So they're not going to carry as much weight as, say, a previous day high, okay? Because a previous day high level, these levels up here, are going to have more volume because it contains all of the day's actions of the previous day, where the pre-market highs and pre-market lows are going to be, for the most part, more often than not, lower volume. Okay, there are some exceptions to this rules when it comes to earnings and things like that, but for the basics of this videos and the concepts I'm going to teach, you need to understand that. Okay, so there's a reason why previous day highs and previous day lows are up top, because these are the most important versus the pre-market levels. Again, it's just based off volume, use some common sense. So the EMA of LE model, okay, the EMA here that we're talking about is the 8 EMA. So that's that purple line right here. So I'll add 8 just to make sure we're all on the same page. So what is the E in EMA state? So that means if a level breaks, then we look for an EMA retest. And we can see right here, okay, the stock rips up, comes down, perfectly taps the 8 EMA. So we'll try the 8 EMA here and then happy face money sign, okay, and then continues higher. The same thing for stock on a downtrend, okay? Stock is below the 8 EMA, comes up, taps 8 EMA right here. We buy puts, so we're gonna write 8 EMA, happy face, dollar sign. Okay, in both examples, when it came down and tapped the 10-minute 8 EMA, we made money. So we're happy because we made money. Remember, if a stock is above the 8 EMA, above the 8 EMA, the trend is bullish. If a stock is below the 8 EMA, the trend is bearish. Please make sure you understand this simple rule. But Ellie, what about the 30-minute? We talked about the tango, right? It takes 2 to tango, but we only talked about one part of the tango. So Ellie, what about the 30-minute? Before we go on, I want to issue a strong caution, okay? Please only continue if you want to take your trading to the next level. If you don't care about hitting hundreds of percents, just stop right here. If you want one time frame, I'll tell you right now, the best time frame for a new trader is a 10-minute. But if you really want to take your trading to the next level, you really want to watch your portfolio grow, you need 2 time frames. So please only continue if you're ready to take your trading to that next level. 30-minute is a secret to time frame tango. So now that we scared all the people away that aren't serious about leveling up their trading, now let's talk into the sauce, okay? Why the 30-minute is the secret to the time frame tango? It'll provide more information. Again, we're tangoing it with the 10 minutes, okay? So it'll provide us more information on the range of the stock, okay? On the range, okay? It will tell us if we should keep holding. Ellie, I see you post 200-300 percenters. Like, how do you hit those? It's all from the 30-minute chart, okay? It will give us more conviction. Think about this, right? If the 30-minute chart is super bullish and the 10-minute chart is super bullish, is a stock bearish? No, right? It's super bullish. Like, we're going to buy all the calls. We're going to make all the money. Think about that when it comes to the time frame tango. So before we begin, right, and kind of get into the 30-minute, is I want to identify range, right? Because I know a lot of people are new to trading and they may not know what this term means. Okay, so range will give us insight into whether or not a stock will continue lower or higher for the entire day. Okay, so remember, what is chop, right? So chop is when a stock is stuck in range like this. Okay, so this is no fun. This is where you lose all your money. But when a stock forms a range and breaks out of it, okay, that's when we get trend, and that is where we make a ton of money and we quit our jobs. So if this sounds like something you want to do, please pay attention. So what does range actually look like? Okay, so I put both bearish and bullish examples here. So in a bearish example, we can see, look, the stock is just getting killed. Okay, so this is a 30-minute chart here. So it's going lower, 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 and lower for 1, 2, 3, 4, 5 candles. Okay, so this is 5 30-minute candles. Okay, so that's 2.5 hours, okay, not minutes, of total carnage of the stock. Okay, 2.5 hours. So if you're in this stock, okay, you made money for more than 2 hours straight. Every time you looked at your brokerage, you got a little bit happier, and all of your fears and worries all went away. What about the bullish side? Okay, so look, it just keeps going higher, 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 and higher. Okay, so it's 1, 2, 3. Okay, so this is 6 candles. Okay, so you made money. Okay, you made money for 3 hours. Okay, 3 hours you made money. This is real power of range. You can see the stock is clearly trending down here. You can see on this side, the stock is clearly trending up over here. This is crucial. You really understand what range is, okay? Because there is no trend if there is no range. Please understand that. So here's an example of bullish range, okay? But there's a couple things we want to know. Let's start with the highs of the candles, okay? The highs of the candles, highs of the candles. Let's make a very simple assumption, okay? Let's assume we're in 6th grade, okay? We're in 6th grade, and what do we notice about that? Okay, let's look from wick to wick, okay? From wick to wick, to wick, to wick, to wick, to wick. What do we notice? It almost looks like stairs, right? It looks like stairs. What does that mean to us? The stock is going higher, okay? It's going higher. It's making higher highs. Now let's look at the wicks on the bottom. You can see, look at the wicks on the bottom. From here to here to here to here, what do we notice? Each low is higher than the previous one. Okay, so this is super bullish. This is the trend is clearly up here. Okay, but I really want to make sure you look at the top of the wicks here. Notice how it's like stairs stepping up, stairs stepping up. It's you climbing, okay, to infinite money up here. Okay, you're down here on your trading journey, right? So here's you, okay, and you're working your way to your trading journey up and up and up and up, right? So you got to climb the stairs, okay, and understanding the 30-minute is part of that journey. But remember back to what I said, right? The 30-minute will tell us when to stop holding the stock. So I want you to see something. Remember we said earlier, right? So each of these wicks was higher than the previous wick, except for which one? This one. Notice how this wick is not higher than this wick up here. Okay, that means that the range is going to either pull back or it's going to form a new base. Okay, so as an options trader, once we see that, that's our caution to get out. And you can see the next candle immediately pulled back. So how do I summarize this, right? So as long as each wick is higher than the previous one, we're going to keep holding. Once it stops, we're going to think about exiting our position. Okay, so that's when you get out. This is super key here. No, I'm telling you, no one on YouTube explains this except me. This is going to change everything for you. Now, in a bearish example, we can see the wicks here. This one, unfortunately, doesn't have a wick, but the top of the candle, okay, top of the candle is going to have to be the wicks. These are all lower than the next one, okay? This looks like a staircase into the gulag, okay? It looks like a staircase, okay? So you can see it's a staircase down. Each wick is lower. When do we stop holding, right? You're probably thinking to yourself as, boom, okay, here's this wick. It's higher than this wick. Time to get out. Remember we discussed, right? Each top of the candle is lower than the other one. So lower than the other one, except this one. But wait, Ellie, I just noticed, going back to this slide, we actually went lower, but you told me to get out here. Exactly my point. Notice how it went lower. Look how bearish this candle is, okay? So let's go back here. Look how bearish this candle is. Look how many sellers are sitting in this candle. It is so bearish. So as you're watching this candle form, you're going to see more sellers come in. This is what we call, let me remove this. This is what we call, it's just a 30-minute bear flag, guys. Just a 30-minute bear flag. So if you have runners, right, say you have 5, 10 contracts left, you already made most of your money for the day, you just hold it. There's nothing wrong here. It's just a 30-minute bear flag. It did not actually give you a real signal to print, okay? I'm going to go over what a real signal looks like in order for you to get out, but this is actually even more bearish, and you can see the stock made a new low of the day. So let's tie this all together, because you're probably wondering, well, how do I look at both at the same time? I understand that, but we're going to fix that right now. Here's a 10-minute chart, okay? So in this case, okay, this stock had a really bullish news, okay, 20, 30 minutes into the open, okay, it had really bullish news, so blasted everyone out. It's really starting to trend. what are we going to think to ourselves, right? So we know it had super bullish news. This stock announced crazy news, okay? So we got to get in, okay? But we can't just randomly buy it off the open, okay? We can't be like, oh, this news is so good, you can buy it off the open. Remember, 90% of traders fail. So when they hear a stock has super bullish news, what are they going to do? Buy it off the open just to get stopped out and get back. But you're a student of LEDs, so you know the levels first and then EMAs, okay? Levels are not going to be relevant here because the stock gapped up so much on good news. So what do you got to do? You got to look for the E and LE model. So look, now we can see the stock pulls down to the EMA, okay? Down to the EMA. That is our dip buy. That is where we're going to buy it. Why? Because it comes down, taps 80 EMA here. You can see a strong bullish candle forms off of that. Now we're ready to lock and load. Okay, we're buying this dip, non-negotiable. We're buying this dip, and the stock continues to trend for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles. 13 candles for 130 minutes or 2 hours. You made money, okay? If you bought calls here, you would have sat there at your desk job making money for 2 hours thinking, wow, LED might teach me how to finally quit this place. But now let's look at the 30-minute chart here. We can see, look at the 30-minute. You see how it's break? They had this tight little consolidation right here. Right? Look at these buyers in here on a 30-minute chart. Look at these big wicks, right? These big wicks show that there's buyers. It shows there's this clear interest. It shows that what? The range is expanding. Look at it. Look at this. Just up and up and up and up, okay? Higher lows all the way through the chart. This is beautiful. The stock did not print a single red 30-minute candle, okay, for 1, 2, 3, 4, 5, 6, 7, 8, okay? For 4 hours, okay, that's wild to think about. For 4 hours, it printed green candles up and to the right. So now let's talk about the tango effect, right? So we talked about how it takes 2 to tango. So while I'm trading, this is what my setup looks like. I have the 10-minute on one side and the 30-minute on the other side. So we can see 10-minute chart. What is the trend? It's above the 80 EMA, so therefore it is bullish. We're going to look to buy pullbacks back to the 80 EMA. Now let's look at the 30-minute chart. Is there range? Absolutely there's range. Look, so here's the range break, okay? Big news candle, inside candle, and now it's breaking higher, okay? Now it is breaking higher. The range has confirmed it's going to break out. Also, it's above the 80 EMA, so now the 30 minutes also bullish, but we'll get into that at a later time. This is the tango effect. Let's look at it. Another example of the tango effect. So we can see here on the left side where the stock was below the 80 EMA. Okay, so below the 80 EMA here, came up, reclaimed it. So we entered right here off of this 10-minute bull flag. And let's see. We can see on the 30-minute chart, okay, it also reclaimed the EMA, made a nice little, tight 30-minute range here. And look, it broke out of the range. Look at the velocity of it. Look at this. Look at the higher lows, right? Beautiful. Here's another example of the tango effect. Here's a 10-minute chart. The stock, maybe a little bear flag here. It's under the 80 EMA. It breaks and we start flushing to the lows. You can see it broke the lows of the previous 30-minute candle. You can see right here and then continues to go lower. If you want to see something cool, what do you notice here, right? So the stock 30-minute breaks lower and lower and lower. Look at this candle right here. So let's go back. You see this candle right here? It's almost like a little hammer candle at the bottom. Notice how it didn't continue to break the 30-minute range lower, and then it reversed. So here's a 30-minute range, and then it reversed. Here's a 10-minute chart right here. Pretty decent reversal, right? So say you entered off this little flag here, you made some nice change, but I'll save that for another time. So Ellie, what is the best time frame? The best time frame is the time frame tango. You're going to use both the 10-minute and the 30-minute chart. The 10-minute is used for finding entries and for finding trends. So remember, entries, LE model, levels first, right? So a level retest, and then EMAs. So you can buy an EMA test, an EMA tap, whatever you want to call it, and then the trend, okay? So if it's above the 80 EMA, it's bullish. If it's below the 80 EMA, it's bearish. The 30-minute will show us how much range the stock has, right? So it's going to say, is the stock going to keep going higher or is it going to chop us out? The 30-minute tells us how long to hold. If a stock stops making higher highs or lower lows, and then we are going to stop out and look for an entry later in the day. The two time frames tango together, perfectly providing the perfect balance because it takes 2 to tango. Going forward, here's an action plan. I want you to review all of your trades looking at both the 10-minute and 30-minute chart and see if you can spot your mistakes. I want you to screenshot all different examples of the tango effect. The only way you're going to get really good at this is practice, 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 and just looking over a couple of charts and really marking it out and understanding. Lastly, only enter trades or both timeframes align while you're practicing. If the 30 minutes bullish and the 10 minutes bullish, then you're going to buy calls. If the 10 minutes bearish and the 30 minutes bearish, then you're going to buy puts. Additionally, check out the resources down below. I have tons of free EDU and videos and other ways where I can help you in your trading journey. Peace.